Mozambique's top court says state-guaranteed Eurobond is illegal. Angola courts investors with oil block auction. Plus, South Africa Reserve Bank says it won't bail out the troubled state firms. Hello and welcome. Thank you for joining us on Business Incorporated. I'm Chimezi Obi Iwawu. Let's get started with the markets. And here on the African continent, Nigerian market and the market in Egypt remain closed for the Muslim holiday. However, at intraday, the JSE index in South Africa was up 1.35%. Kenya traded positive on Tuesday. And the markets in the Middle East remain closed for the Ramadan holiday. However, on Monday, all the indices were in the green. The Abu Dhabi index was up 2.82%, while Dubai's index was up 0.79%. In Qatar, the index was up 1.49%, while Saudi's index gained 1.22%. And in Europe, stocks traded higher in the morning after Wall Street delivered its second-best day of 2019 trading on Tuesday. For more from the European space, let's bring in Conrad Busen. Good afternoon, Conrad.
Good afternoon, Chimi. Thanks for having me back on Channels TV.
Great. Well, negative economic data and outlooks had to be priced in on the bourses today. Now, the World Bank has reduced its global growth outlook from 2.9 to 2.6%. The IMF has cut its growth forecast for China, and in Germany, where you are, the mechanical engineering companies reported about fewer new orders and slower production. Not a good environment for equity trading, right?
Absolutely, Chimi. Not if you want to invest in company shares because you believe in, a bright and beautiful future for profits. And look at what the German share index has been doing here all day. It's sort of zigzagged across the unchanged line all day. What's keeping investors from completely losing faith in equity, in company shares? That is the speculation with the central banks, the speculation about lower interest rates. This was triggered by the Federal Reserve Chief, Jerome Powell, who yesterday in a speech in Chicago said, well, he did not use his usual reference to the central bank being patient in its approach to any rate correction. What he said instead was, and I quote this freely, "We are closely monitoring the implications of developments involving trade negotiations and other matters, and we, the Federal Reserve, will act as appropriate to sustain the economic expansion." These remarks have fueled the idea among investors that, a rate cut can be hoped for in the United States. And let's not forget, tomorrow we have the meeting of the European Central Bank's Governing Council. It's not expected that the ECB changes interest rates, but it is expected that more dovish wording, more accommodating wording will be coming from the mouth of ECB Chief Mario Draghi, something, of course, meant to assure the market that they can rely on the central banks, well, as long as they cannot rely on real economic growth.
Well, in another development, the conflict between China and the U.S. is escalating further over concerns that the U.S. might be cut off from supplies of so-called rare earths. And of course, China, on the other hand, has issued a travel warning for the United States. So, we're awaiting the G20 meeting of finance ministers and, of course, central banks chiefs this weekend. Will this perhaps de-escalate the situation?
Chimi, in former times I would have said yes, because, of course, institutions like the G20 were installed in order to defreeze the situations between the nation, to help them to work more smoothly together. But I have to say, the problem is an organization like the G20 needs players that really want to work together to find common ground. And even if some members of the Trump administration occasionally come out with statements that give hope that they are willing to cooperate, the things that Donald Trump, the president himself, has to say sound very differently. So his disruptions, I have to say, they are really throwing sand in the works of an organization like the G20. We also should not forget that it's the finance ministers and the central banks chiefs of the G20 countries which are meeting next weekend. Meanwhile, of course, the president himself is pretty active in the UK. The Chinese president is in Russia today, meeting Vladimir Putin. And of course, this meeting sort of sending a signal to the US, hey, we can do it without you. Let's wait and see what the G20 ministers this weekend will come about.
Okay, let's look at corporate news there. Volkswagen says it plans to invest some 4 billion euros in digitalization projects, but some 4,000 jobs in non-production units will have to go. Again, software company Salesforce has come out with profit guidance, as well as computer games retailer GameStop. How's it going there?
Well, let me start with GameStop because the share price movement is so stunning. GameStop's shares are losing 1/4 of their value today here, 25%, because GameStop has announced that it will scrap the dividend. It has to cut costs because of a plunge in sales of game consoles. Business with Salesforce, the software company, is much better. Software company Salesforce has come out with a forecast of full-year results way above expectations, and this is pushing the share price here in Frankfurt trading today 6%. Salesforce, of course, has a large German competitor, SAP. This software firm is also part in that story that you mentioned, Volkswagen. Huge investment in digitalization, in a digital transformation plan. Volkswagen announced that automation will make tasks that were performed manually in the past, well, not obsolete. That's not the way how Volkswagen puts it. They say those tasks, those in the past manually tasks, are going to be simplified through IT. The new Volkswagen, as the company calls itself, will be an organization faster, leaner, more competitive, and more agile. And of course, all this has to do with the transformation away from diesel. The CEO of Volkswagen, Diess, only recently said that building zero-emission vehicles requires 30% less effort than building a car powered with an internal combustible engine. And there you have it. You don't need all the workforce. You need to invest in digitalization, and that's what Volkswagen does together with SAP.
Digitalization all the way. Anyway, Conrad, thank you for your time. Please remember, we have to keep a tab on that ECB meeting tomorrow. And in the UK, Trump said on Tuesday that the US is committed to a phenomenal trade deal with the UK as the nation gets ready to leave the European Union, adding that there was tremendous potential for this. But let's get a feel of how this talks around this, around the London market there with my colleague Simon as he joins us from our London studio. Good afternoon, Simon.
Afternoon, Jimmy.
Sure. So Trump is concluding his visit today and he is expected to travel to France. What is the rating of Trump's visit out there on the streets of London?
Yeah, well, a lot of interest certainly surrounding the security and the police and the helicopters, lots of convoys through London where police stop the traffic to let various VIPs through. Actually, I've got a running route that goes around Regent's Park and I've had to divert my running route because President Trump and all his guys are staying in the big country house there, and there are huge barriers up as if it's a music festival or something. But as yesterday showed, a lot of people are critical of Donald Trump and the things he's done since he's been in office. I think a lot of people here also equate him to Brexit and see him and people like Nigel Farage being similar in terms of their nationalistic outlook. So while there were pockets of Trump supporters wearing Make America Great Again caps yesterday, I think the majority of people here in London at least are anti him. This is no surprise. He's a controversial figure. Whenever he goes to Scotland, where he owns several golf courses and hotels, there are protests there. But remember, there are lots of people outside of London and outside of Scotland who voted to leave the EU, so there will be people, maybe not out shouting on the streets, who admire his resolve to get good deals and shake up the status quo, especially people who feel maybe the current political system doesn't work for them.
Well, let's look at the data out there. Composite and services PMI figures for the euro area showing the UK economy was close to stagnation due to uncertainty over Brexit. So how is this data being read by UK authorities and, of course, investors?
Yeah, British economic growth almost ground to a halt last month. That's despite a pickup in service sector growth. Data firm Markit just reported that its composite PMI index, which tracks activity across the UK private sector, fell last month to just 50.7 from 50.9. There are actually 3 relevant PMI indices measuring various parts of the economy, and taken together the 3 PMIs gave one of their weakest readings since 2012. A Eurozone PMI was only slightly stronger as businesses across Europe face challenges from the trade conflict between the United States and China, as well as Brexit. Official data showed Britain's economy grew by 0.5% in the first quarter of the year, though much of that was driven by firms stockpiling ahead of a Brexit deadline of March the 29th, which has, of course, been missed and postponed until October 31st. The Bank of England forecasts Britain's quarterly economic growth rate will slow to 0.2%. for the 3 months to June. So a pretty gloomy outlook there.
Okay, so is this data having any significant impact on sentiment in the markets today?
Yeah, there's no reaction really to the data in financial markets. Investors think that the Bank of England is more likely to cut rates than raise them over the coming year, despite it saying it expects to borrow for costs to rise gradually if a Brexit deal can be done. Overall, this points to positive but weak second quarter growth and a monetary policy committee on hold until Brexit is resolved. Remember, the PMI surveys do not cover the retail sector, which benefited from strong consumer demand in the first quarter, so at least that's something positive. Let's take a look at the markets today then, and you'll see that they are all looking pretty good today. The FTSE All Share is up by 0.56%, the FTSE 100 is up by 0.5%, and the FTSE 250 is up by nearly 1%, turning to the pound, and it's also doing pretty well, just up on the dollar, unchanged against the euro, and also up by 0.22% on the yen.
Well, thank you very much, Simon. Well, ECB meeting is scheduled for tomorrow. I'm sure London will be interested in that, so let's keep a tab on that. Thank you. In Asia, stocks gained ground during today's trading following an overnight rally on Wall Street. Japan's Nikkei 225 jumped 1.80% to close at 20,776 points, while the Topix index also gained 2.07%. In South Korea, the Kospi rose 0.1%. Mainland Chinese stocks ended the trading day largely unchanged, shedding earlier gains. The Shanghai Composite was close to flat at about 2,861, and of course, the Shenzhen Composite rose slightly to approximately 1,494. Hong Kong's Hang Seng Index rose more than 0.2% as of its final hour of trading. Hong Kong listed shares of Chinese telecommunications equipment soared around 4%. The ASX 200 in Australia also added 0.41%. In the U.S., stock index futures were slightly higher in the morning after Wall Street delivered its second best day of trade for 2019 in the previous session. At about 3 a.m. Eastern Time, Dow futures were up 34 points, pointing to a higher open of more than 43 points. Futures on S&P 500 and Nasdaq were higher too. The uptick in trading came on the back of comments from Federal Reserve Chair Jerome Powell, who signaled that the central bank was open to ease monetary policy. Meanwhile, trade turmoil continues to shake up market sentiment. During his state visit to the UK, President Donald Trump doubled down on his recent tariff threat on Mexico, telling reporters that his new policy would take effect next week. Meanwhile, on the earnings front, Brown-Forman, Campbell Soup, Cloudera, Five Below and Mangodub are set to report today. In terms of economic data, investors will be watching ADP employment numbers at 8:15 a.m. Eastern Time, followed by a services PMI at 9:45 a.m. Eastern Time, of course, an ISM non-manufacturing index at 10 a.m. Eastern Time. After the break, we'll look at the latest developments in South Africa. To stay with us.